Yo, what's up, everybody? It is Thursday, September 12th. Markets were up today. Before I get into the markets, I just want to say that I read something today. I mean, to me, it was shocking. I don't know how you guys took this, if you saw it at all, but apparently in the news, the United States and the UK are formalizing a plan to allow UK missiles, cruise missiles, to be launched deep into Russia with U.S. guidance systems, like U.S. Tracking and guidance. And I mean, this just seems like insanity to me, man. Like this is a clear attack on Russia, the largest nuclear power. I mean, I don't know who's formulating this stuff. Maybe they know a lot more than I do. Maybe they're thinking that this is going to topple Putin. I don't know. But this just seems like insanity to me. I'd love to hear your comments. Anyway, the market today was up. Look, leading fiscal flows are like, they're blowing through the roof. They're very, very strong. So I'm not surprised. I said the other day, I said last week that the sell-off was going to see a bounce. And even yesterday I said that I did a whole video on the monetarist zombies freaking out on the CPI number and saying like it was kind of hilarious that their hysterical reaction and totally anticipated or expected to see that bounce back. So, this is normal. We still have very, very strong leading flows. I want to repeat that conditions change after the rate cuts, and that's going to be a slow process. That is not like you get the rate cuts and it suddenly turns the light switch off and everything is completely changed from day one. It is a gradual process. We have not recovered. If you go back and if you look, by the way, at the June tax drain, okay, that's basically when the markets peaked out. I think maybe we had a Dow Jones new high after that, but it was a very marginal new high. But I said leading up to that June tax drain that, we were going to see that peak in the flows. And we have had successive lows following that date. And again, I said it when we were coming into the peak period. I said from August 15th to September 2nd, September 3rd. So it's kind of like, it's been like this topping pattern. We maybe could go up and test it one more time again. But once again, let me repeat, we get into a change of condition, fiscal condition, monetary condition, after the rate cuts. We had a second rate cut now with the ECB today that lowered the rates. Now the policy rate is down to 3.5%. ECB also pays interest on reserves. So that's the beginning of this withdrawal of the interest income. And again, it's going to occur slowly. You have offsetting factors like securities that are maturing now at a higher coupon. The main effect that we're going to see initially would be, at least for the U.S., in the T-bill discount, in the euro system. We'll see lower transfers to banks from the ECB. So it's gradual. But nevertheless, this is a fiscal drag globally, really. And it's going to play out over time, and you have to keep that in mind. I know a lot of you are fixated on the day-to-day, what's going on in the market, and you want an explanation for why it went up today, why it went down yesterday, why it went up the next day. You can't always have, like a rational explanation for day-to-day, basically noise. You got to have that big picture perspective, which is what I always tell you guys to have. Just chill, stay calm. I did a whole thing yesterday about emotion and the whole thing about how you got to fade people who are very emotional and hyperbolic and hysterical every time something happens. You don't want to be one of those people, okay? So right now, how would I sum it up? I would sum it up that next week on Monday is a quarterly corporate tax drain. We're going to get the rate cut on Wednesday. That's probably going to be a bullish short-term impact for the market, as the monetarists are going to be triggered by that. They're going to buy. But again, this is the beginning of the end of the monetary and fiscal condition that we have been in for a long time. Okay? It's going to change. It's going to change gradually, but if you're smart, look at what Warren Buffett's been doing. And the guy's like 93, 94 years old. I don't even know if he follows this stuff, but, you know, just intrinsically, he kind of feels, or he understands that this is a good time to raise cash. He's building up a huge cash haul for the prospect of when the market offers better opportunities. And I would say the same thing right now. Anyway, this is going to be a short video today. Not a lot to talk about. Don't forget, please like and subscribe, and go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. See you tomorrow. Bye.